incremental details and the commentary coming in. The attrition rate has come off and that was expected 12.1%, but K. Krithivasan is saying that they're pleased to report a strong start to the new fiscal year. They're seeing expansion when it comes to certain geographies as well as client relationships, and they're also talking about how the new delivery centers in America, Canada and Europe is expected to play quite well for them going forward. Samir Siksaria is also talking about the fact that despite the wage hike, which is of course going to play a part in Q1 earnings, they have delivered strong margin performance. Operating excellence is something that they have been talking about and they've delivered on that as well. In fact, on the margin front, it has been nothing short of impressive for TCS of late. Milind also talks about how the increment process has gone in pretty much the fashion that they were expecting. The employee engagement is something that they're working on, and of course employee retention is something that they've managed to do well, and that's quite visible with the kind of attrition number that we have seen coming in for the company, which is lower to the levels of around 12.1% thereabouts for the company. But Mahantesh, if I had to ask you the top picks within the sector and differentiate it, let's say, within a large cap IT and a small cap IT, tell me which are the names that come to mind from A, the large cap names, and then the mid caps.
So from the large cap, it is obviously better to go and stay with the larger peers, the top four. So TCS being one of the larger ones seems to be the one to really go for. But when it comes to mid caps, you have to search out those which are in the engineering services space. It could be such companies as a Tata Tech to a Tata Elxsi to even a KPIT. So some of these companies can deliver better growth ahead because engineering services is generally seeing a revival, particularly driven by the driving side technologies that are getting developed. So we should be looking at these companies. But TCS is the largest company among the IT players and the safest, I would consider, for any portfolio. It's like something that everybody would have in their portfolio.
Taken. We are watching out for all of that. Omkar Tanskali also joins us on the show. But before that, just wanted to fill you in with some other details that we've got as well. It's a 4.4% constant currency number coming in. But do remember, this is YOY, not quarter on quarter. Usually, we look at quarter on quarter, and there the expectation was 1.4. There's a net headcount addition that has also happened. So 3 quarters on a row, we had seen that the headcount had declined for the company. This first green shoot emerging now that the headcount has actually improved, telling you perhaps that the company is getting a bit more confident, and it's not a small headcount addition. It's a headcount addition of 5,452 coming in. So that's quite positive as far as headcount is concerned. And even if you look at the other verticals, BFSI continues to be a pressure point because in terms of the composition, BFSI continues to, provide lesser contribution overall to the business, and North America too has managed to kind of drop a bit with respect to the contribution that it does to the overall business. This time around, the company has not actually given out the dollar revenue number. At least I'm not able to find that as quickly as usually we are able to, because it's the first number that they usually give. We'll have to look for that further. But Omkar, we have a constant currency number on a year-on-year basis, which is 4.4%. Profit figure of 12,100 crore thereabouts, and then margin figure coming in at 24.6% with a net headcount addition of 5,400 and attrition of 12.1%. First thoughts.
If you like this video, then like, share and subscribe to ET Now.